Good afternoon. Quick audio visual check. Can everybody see my screen and hear my voice okay? I have an abbreviated class today. Thanks for letting me delay it one day. I had some travels that I needed to work through. And welcome. In short, we're the only company for futures, forex, equities, and crypto traders that are letting people know there's an alternative to lagging indicators and foo-foo gurus. We don't believe in super secretive setups that work a while and once the curve fitting wears off, disappear into oblivion. We believe markets are predictive, much like those before us, men like William Delbert Gann, who found that patterns exist that institutions, I believe, large like Morgan and the like, not only take advantage of, but exploit for their benefit. That's a tall order. It's okay to say you believe in something that's predictive, but if you really believe in predictions, you'll do what we've done this week and every other week in the past for the last 15 plus years. See, we're the only company that puts our money where our mouth is, and we give traders who take on our website the times and directions for markets like the popular E-mini P in advance. On top of that, we actually give people trading rules in advance. We give you the times and directions that we're expecting markets to move predictively. And then when those times arrive, we encourage you to test a very simple trend entry system. We're going to look at examples of that here today. When all those times are in the past, finally, when they go from a present to a future to a past movement, we come together every Thursday and see, hey, did this thing work or did it not work? And it's this idea that in large swaths of data, there are always patterns. There's no such thing as chaos. The closer we look at the universe, whether we're at a relativistic level, an Einsteinian level, or now a quantum subatomic level, we see that there's this eerie order and precision to the way things move and work and operate. And the closer we study nature and the more that we look at it, the closer we peer into it, we see that things we thought were random are in fact determined. Physicists and astrophysicists and those of their ilk believe that the universe is deterministic. If we had a computer big enough to study all of the molecules and how they interacted with each other, we could predict what the very next movement of every molecule in the could be. Well, markets are just microcosms of these ideas. And so if I showed this to my mother-in-law, she would see chaos. She wouldn't know what this was. It looks like something a grandchild might paint for her at an art class in kindergarten, or something her fifth grade grandchild might bring home from their geometry class. But when we apply the right tool to something chaotic and random, we can see that there's information scattered throughout the random, chaotic patterns. In this case, looking at a QR code through an app on a phone tells us that it's a URL or maybe an email address. And in that same sense, if we believe markets are predictive, that in fact there are cycles inside of cycles, we can use a tool to study if in fact there are any times lately when markets are regularly going up lately. In this example, we have a green arrow underneath every 5:30 a.m. Eastern Standard Time reversal. And we see that there's a preponderance of signals where in this example, CL raises its price. Let's use a different pen color so we can look in there. So your brain is not thinking about the fact that many times the price of oil goes up directly at 5:30 in this example. And that's due in large effect to a psychological phenomenon known as the recency effect. The recency effect means you're paying attention to what's happening right now. You're focused on what's right in front of your face. And banks are totally loving the fact that you're not paying attention to these cycles at all, that your eye is uniquely focused, your subconscious, everything is looking at what's happening right now. And yet these patterns exist, and someone who believes in the times the way we do is watching for that next 5:30 moment and looking to see if they can take advantage of another rise up with very little risk. That's what we believe and we look for. Predictively, we're scanning markets for low risk opportunities where times that repeat regularly may happen again. So again, this sort of echoes what I mentioned in the early moments of the webinar. We're able to put our money where our mouth is. And so every Tuesday, those of you who take the video demonstration on our homepage, you're given access to the forecasts for popular markets that we'll take a look at in a moment. E-mini S&P, oil, gold, the euro, US dollar, Ethereum, just to help get your conscious disbelief over the fence and prove to you that what we've been saying for over a decade, almost two now, is true. And so all of those times are available for Wednesday and Thursday, and then we come back together to see, did the times in fact work? Spoiler alert, they did again. And so let's take a look at the difference between the signals and the setups here as we get started. And just again, thank you for hanging out with me this afternoon. If you were taking our demo, you were privileged to receive information. And so earlier this week, our general manager, Miss Rachel Schmidt, put together screenshots, things that you would have seen with your software if you owned it, for what was expected on Wednesday and Thursday. We've given you a veritable cornucopia of markets to choose and look at. The E-mini S&P 3-minute and 5-minute chart, oil futures 3-minute and 1-minute chart, gold futures 5-minute, the DAX, the euro currency, the Dow, the NQ 1-minute, the euro dollar, the pound dollar, and Ethereum. All of these markets had information available for them. And so today is November 1st. Happy November 1st. And I want you to look with me in the bottom left corner of your screen. What you're going to see is that this chart has been available for 4 days. This piece of information was available Thursday, Wednesday, and Tuesday ago. So on Tuesday, the program was warning about potential movements for the E-mini S&P 3-minute chart and 5-minute chart on Thursday. That is the definition of predictive. And on Tuesday, we have all of the times from the European session all the way through the close of the American session for the 3-minute using Eastern Daylight Time times on top. Does that make sense? Because that seems like marketing suicide. I spend quite a bit of time, as you can imagine, looking at what other people are hawking, hawk-toing their web pages. And it's interesting to me how everyone is in hindsight How many of you have noticed that internet marketers and gurus and trading tools companies always look amazing in the rear view mirror? They're always showing you their latest and greatest. One girl in particular, she looks like she's 12 years old. She's a confessed social media manager and marketer, and she's telling everyone about her $40,000 trade. Well, what were your losses? Do you ever trade and have a loss? Because I haven't met anyone in nearly 20 years who doesn't have losses. And so everything looks great on the surface, but always in hindsight. So what this program was doing, what the internet is unable to do, is it's essentially telling us, here's the entire U session. On Tuesday, it was warning us about moves up at the white lines. 1106, 1224, 127, 203, 239, 306, and so on. And it was warning us about potential moves down at the blue lines. So when you saw on Tuesday all of the timestamps for the blue lines, it's not because I'm a super duper guru or I have access to some black box proprietary Jamie Dimon type institutional information. It's because it was in fact a selling pressure pattern at those times. This market was falling down at 1139 over and over again in the chaos of the historical data we can't see. These white lines at 838, 943, 948, 1009, and 1106 only here because in the plethora of chaos of the historical data over the last several weeks, there's a time, these times, where the market is continually rising on a 3-minute chart. Now, just a word to mention this, sometimes there's confusion. The moves and reversals on a 3-minute chart are bigger than the moves on a 1-minute chart and smaller than the moves on a 5-minute chart. And so the times on each time frame are going to be different. The times on your 60-minute charts may have 2 or 3 moves in an entire day, where the moves of a 3-minute chart, because the legs are smaller, may have as many as what you see here, 15 or more. So we can use these techniques to look for the movements on whatever time frame we're looking. Okay, so now here's kind of where the rubber meets the road, so to speak. When I come back 2 days later, I will see, what did the market do at the 3-minute times 2 days later? And let me preface this by telling you, everyone who sees this tells us it's impossible. Everyone who sees this tells us it's impossible. Okay? This is crazy. Remember, here are the times, ES 3-minute. Here is the chart, ES 3-minute. And when I come back 2 days later, look at what happened at the times. Look at what happened at the times. What do you think about that? Let me lean in here. Carl, congratulations. Carl says he's $200 away from passing 2 Apex evaluations. He's going to pass those on Monday. Time warp is the reason for my success in passing these. All right, give me 1 second here. Stand by. Actually, these times from Thursday, ES 3-minute chart. I was looking at today, Friday. Okay, let me redo that, because I was looking at Friday's times just now and I was wondering why they didn't line up. There it is. 618, 618, 636, 636, 912, 912, 833, 833. Okay, now they line up. These were the moves for Thursday. The ones we were looking at today were the predictive moves for Friday. I didn't give you these times in advance. I keep forgetting I'm 1 day delayed. So if you own the software, these times for Friday, these were the times that you were given for Thursday. Okay, so let's go ahead and pull these out. Everybody good so far? Okay, so these were the times I just showed you for Thursday. I was checking myself and thought something's wrong. And then these are the times for Wednesday that I gave you. So we have the 3-minute chart signals. We have the 5-minute chart signals for Thursday and for Wednesday, right here. Okay. Let's go back and look at the 3-minute signals for Thursday, because those were the ones that we started with at whatever market you want. Okay. Going back to yesterday, I also give everybody a trading system to follow, just a basic turnkey system with nothing fancy. We looked at the signals. Now let's look at a setup. There are two setups called signal end or punctures that I give everyone in advance. Now, most traders who are using the program are following the market with relatively with direction of trend in mind. And so exploring this trading system on the times that I gave everybody, these are the ways that we'd be looking for the signals. I'm following a 120 period exponential moving average. Now, this isn't the only way to trade with these times. You could, of course, trade your own system or integrate these times however you see fit. Some people combine them with other systems that they've learned over the years, combine them with their pivot levels or their PTO levels or their market delta levels. What we're going to do here is boil it down to the most basic signal we can. And so if the 120 period moving average, it's exponential, not simple, is falling, the line turns blue. In blue, we're looking to sell the market. For how long? Until the next buy time. So everywhere we saw since Tuesday a blue line, those were times, if we're below the moving average, that we're interested in selling. And we're going to hold that trade until it gets to the next buying time. So there are these windows of time that we can explore and exploit and see at the end of the session if we've made any money or not. Okay, so let's explore the two setups that we had in the guide that I gave everyone. First, what's our stop? In the guide that I gave everyone, we're looking at a 1.5 average true range stop. And you'll see that over the course of the session, that the average true range is growing and shrinking. And so sometimes that risk is greater, and sometimes the risk when the market is slow and starting is smaller. But our risk is always 1.5 average true range values away from the candle high or low. Well, if that's too much for you, you can go into the software and you can always lower that value. The default value in the software is 1.5. Nearly everything in the indicator is configurable, by the way. So let's start adding up the signals here from the econ forward. From 8:33 until 9:12, if you bought and held, you gave $5 back right away. Now, 912 closes above the moving average, above the moving average, above the moving average. The very next candle closes below the moving average. And so when it closes below the moving average, we call that a crossover trade. And we put our stop right above the candle, which closes underneath the moving average. So right here at 921, we can enter with a short below the EMA. And that's called a crossover trade because the signal has crossed over into the trend. We enter at the close of that candle, and now we exit at the next buy signal. So that's a 20-point theoretical winner. Let's just go through those all real quick. Enter at the close of 10:05, exit by 10:09, minus 6 ticks. Exit at the close of 10:30, exit at the close of 11:06, another $16. Let's come over here and keep going. Enter at 11:39. If I got $10, I go to break even. I only got 7. So we only had a maximum favorable excursion of $350, which means I have to hold it until it hits the stop, minus 9. The next signal is at 112, a signal with trend. We enter at the close at 112. We exit at 127, minus 2 ticks. We enter at the close of 148. We exit at the close 203, plus 5 ticks. And we're just kind of working our way from left to right. Enter at the close at 224, exit, we give back, we get 2 ticks. Enter, exit, 0. Enter, woo, exit, plus 7 here coming into 4 o'clock. Okay, so those are all the signals with trend from the times that I gave out on Thursday. Does that make sense, everybody? Okay. The second signal that I show people is called a puncture trade. And the way a puncture trade works is different. And to do that, I'm going to basically show you a little bit of a graphic to explain what a puncture trade is and how it works. Let's look at this in English. A puncture trade works on the basis of a counter trend signal. So if I have a buy candle right here, you're going to see a stop level that's 1.5 ATR values away from the low. And what we're expecting to happen is for the market to rise up and move away from the stop. This, in essence, is what's expected. Well, what happens if it continues instead to drop? What if it starts moving lower and lower? What that is in effect telling us is this. It's essentially saying the thing we were expecting isn't happening. In fact, the opposite is. And so a failed prediction can be interpreted as a SAR, or stop and reverse signal. And so a failed counter trend signal, you ever remember back in high school or middle school, they had something called a double negative? I'm not cleaning my room, which equals I am. Okay. So in this case, if we through the stop level of the counter, a failed counter trend signal equals an entry for a trend signal. It's a double negative. it's still going down when it was expected to go up. Okay, so now watch it here with me because it's kind of neat. When the signal closes or moves down through the stop right here, I put my stop for that 1-2 ticks above that candle. And so in this instance, we actually escape the wrath of the stop, and we survive to get out by the next blue signal, which is plus $3.50. Here, in the very last candle, it punctures and finishes exactly where it's now. Then as we start to move forward, you're going to see an instance come up right here at 127, where the puncture really shows its power. The candle moves through the white line. It's not doing what's expected. It's not climbing higher. Those of you from Omnia will recognize this as a reverse polarity sequence, but we can interpret it as a puncture. A failed counter-trend signal equals a trend entry. Our stop goes above the candle which punctured the line. We enter at the puncture and hold it until the close of the next trend signal. Now, can you keep it in there and trail it? You sure can. You sure can. But for the sake of argument, I'm going to keep it simple. Okay? Any question about that? So for Thursday, all told, these are your winners up above, and these are the losses down below in the lower left corner. And what you see is, number one, the winners are much larger than the losses. 20, 16. Let's go ahead and move some of these around. 20, 16, 3.5, 0, 9 3/4, 1 1/4, half, 0, and 7. And then down here are the losses, -5, -0.5, -9, -1. And what's bananas about the entirety of this is that the signals were based on something that I gave everybody from 2 days, 3 days, 4 days ago. Let me come here. The rules for these times were given out with the times, the setup with the signal 4 days ago. Any questions about that? Because that's a lot of money. Okay. Now today, if you add the foresight, the wisdom, the mental fortitude to have purchased the program, this is what happened today at those signal times. And it's really as bananas as yesterday. If you had the webinar yesterday and you'd said, Michael, I'm in, I'm buying, this is what we'd get. I'll put the losses in the corner, -2. Here comes the 9:36 signal, long until 10:18, plus 25. Puncture, stop below the puncture candle, -6. Signal with trend at 10:45, exit at 11:33, 11:50. No puncture. Signal with trend at 11:51, stop out right there, -10. Close below the moving average, crossover trade, holding until 2:06. Signal with trend, stop out, -8. Puncture, out by 409, -250. So 36.46 brings us 40, 32, 31, 29, 19, 17, 16 points net on this day. Times $50 per point, 500, about $900 hypothetical if you traded with it today. And here's the bananas part. We already have the times for Monday of next week. There they are. These are the times for Monday of next week. They don't paint, repaint, disappear, reappear. They are what they are. And so as we go back in time, what you'll start to see is, boy, these guys are pretty predictable. If you look at what they're doing day in and day out at these dates and times, the moves are occurring more or less right on schedule. Any questions about that? Earlier today, I posted a picture and I was theorizing that the market was about to go down. Why did I think the market was about to go down? Because at 11:33, we were at a lower high. At 11:33, we were at a lower high, and I began to look for an entry short. The move from 10:45 till 11:33 had not made a new high. And so I determined at that point, Earl, that was going to be my line in the sand. And I saw the trend reversing at that point. And then today you can see, based on a very simple assessment, 11:33 lower high. That was in fact the reversal point into the end of today. But I have to have this to make those decisions. Okay. The ES is not the only market that's susceptible to this. Let's go back and look at oil yesterday. And Quincy, I'm not going to go through and add everything up. I'm just going to ask your eye, hey, look at where a white dot was expected, and did the market go up or down? Look at where a blue time was expected, and did the market go up or down? This was Thursday. Let's go back and look at Wednesday. Quincy, do you think the price of oil was random on Wednesday? What happened at 8:51? What happened at 8:15? What happened at 7:27 and 6:54? What happened at 9:42 and 10:09 and 10:24 and 11:24? Oil isn't random at all. It's one of the least random markets. And then we can go back and look at the day before that when I had given you the times. And remember, all of the signals that you see here are 100% certified by the fact that I gave you those times in advance. You could have had these for yourself. So all of these times, Quincy, are this chart. Now, most people, when they see it, they have a self-defense mechanism kick in. They go, oh no, 98% of the signals worked, but what about that one in the corner? It's always fascinating to me how 3/4 of the thing is miraculous and the human eye is drawn to the imperfection. How about silver? Okay, well, what I can do instead is show you gold, because I didn't give you the times for silver in advance. Quincy, I gave you the times for gold in advance. And so these signals for gold yesterday. Okay, I'm going to let you look at them real quick. No, day before yesterday. So Quincy, these were the signals that I gave everybody for gold on the 5-minute chart for Wednesday. Same scenario. And then these are the times that I gave everybody for gold for Thursday. These were the times for gold today. Let's look at silver. See if I have a data feed for QI, right? Or is it SI? I'm not sure which one. I haven't seen this in a while. Let's try SI. Yep, so here are the times for silver today on a 5 chart. You know, at this point, I'm not curve fitting it to make it look good. All I did was change the symbol, right? So I didn't do anything differently. And then here are the times for silver for Monday, ready to go, for Tuesday, ready to go. And as we go back, these were the times for silver Wednesday and Tuesday. It's all the same manipulation. Okay, so of course it works for silver. There's no market that it doesn't work with. On a daily time frame, I wanted to go over this with you guys. There's 2 types of signals, two setups that I watch for, 2 groups of parameters. And Ian, before you freak out, this is the default setting for the daily chart. I haven't changed the settings over yet. So Quincy, if I keep the same settings that I use in all the other markets, this was what the chart showed me for the daily chart for the E-mini S&P. And one of the things you'll see here is that there was a sell signal on October 29th until November 7th. I use a different set of settings only on this chart in my webinar. And to be consistent week to week, I'm going to change it over right here. And these are the settings that I use for the E-mini S&P daily chart. How many of you are in my class and remember what I was teaching earlier this week? I told everyone in there, Ian, that the signal on October 18th was not very strong. In fact, Ian, we were moving down away from the closing price of that signal. And much in the same way that we were looking at punctures, when you see a signal like that where it's not going up and it's degrading and starting to move down, I started to place a lot of emphasis on the next signal. So here we are on Friday, and it's a blue dot. And so I'm expecting us coming into Monday, Sunday night, to have potential selling pressure now coming out of the weekend on the daily chart. But if we use the default values, as some of you do, you'll see that that signal was available to us already from the 29th. So I prefer to use that other group of settings on the ES. I think that works really well. So we're not married to one time frame. So instead of the daily, we can look at the 60 and we can start to get a feel for what the predictions are on higher time frames. Again, the higher the time frame, the the larger the move, the fewer the numbers of signals. And so today we had a selling signal on the 60, or rather, from 1 o'clock this afternoon until 3 o'clock this afternoon. The next signal is a selling signal at 9 a.m. on Monday until 2 a.m. on Tuesday. So you can see it starts to get really handy here when we're looking at different time frames. And so Quincy, for you, these would be the 60-minute signals on silver. And again, you don't care about after the fact. What you care about is this, what's waiting for us on the right-hand side. Yeah, I do the same thing, Venus. I look at daily, 60, and usually the 5 and the 1. I won't look at the 15 or the 30 in between. So what we're kind of left with here, Quincy, is an uncomfortable reality that gold, silver, oil, the E-minis, the euro US dollar, the DAX, all of those things are sort of beholden to these moments in time. These are the euro US dollar now on a 60-minute chart. What if you had known these times in advance? Could you use a very low risk entry to test and see if JP Morgan or Deutsche Bank or Bank of America was going to do it again? What if you lined up in the future to see if, hey, is this move going to happen again? Because if so, I want to be in that number when the Saints go marching in. Here are the signals for Bitcoin on a 60-minute chart. And now all the way out again to a daily. And all the program is doing is sifting through the data and looking to see, are there any patterns in time that we can exploit? And the last signal where you'd be inclined to buy Bitcoin was on October 1st and hold it until October 24th. This is Bitcoin on a daily chart. You would have had a puncture. So if I'm trading it the same way, long at the crossover, stop out minus 1600, long at the crossover, stop below, exit on the 24th, positive 56.86, long at the puncture, and then negative 2000. The prior trend signal is here, positive 1800. So whether it's the daily or the 60 on Bitcoin, you can use it and trade it the same way you're trading 5-minute E-mini S&P signals, right? And one of the things I'm starting to explore in our live training room are something called aggressive counter trend trades. Aggressive counter trend trades. Where now, Quincy, if I see a signal like this, I enter on the close and I put my stop just underneath it right there. And now I'm in and out, and now we're entering again, just like we were before. Signal with trend, signal with trend. So in my live room, a lot of customers have told me they really like this setup. The lowest risk possible. I'm not going to use this line down here. I'm going to put my stop right under that little candle and see if it goes up straight away. Aggressive counter trend signals, or X, can be really super powerful. I use that a lot. What? In my NASDAQ trade. when I see signals on the NQ like that, where I have a very small candle and I can get a stop right underneath it, I love to place those trades there. Any questions about, it can be, Quincy, it can be a very low risk stop. Yeah, you can filter them and look for those. So we can look at small time frames, or we can look at larger time frames. If you're an options trader, you're looking at SPY or QQQ. Very similar setups. The time frames are irrelevant. We can go out to a daily and even weekly predictions for those of you that are holding longer term investments. I think I crashed my NinjaTrader. That would be pretty awesome. Let's wait for it to calculate and then I'll give it a second. But we're coming around the corner while that's loading up. What I've done in essence is give you 2 days of signals, and we've had a peak at the third day with Friday kicking in. And we can see the difference between the signals and the setups is as simple as applying rules to those times and directions. And if my theory, my belief is incorrect, we shouldn't be net profitable at all. It should be a cascading series of failed entries, stop out after stop out after stop out. But in the end, we have an edge. We have an edge that sort of dismisses markets as random and forces us to think of them a little differently. Maybe there are people with a plan that are executing their plan at key times each day. And if that's true, if the charts bear out our theory, which I think they have today, then it causes us to rethink everything we're doing. Does this provide an edge? It does. I know in advance I have an entry, an exit, a stop loss, and a time-based target. I'm not nervous. I'm not watching every tick of every candle, wondering if this is the move I'm going to miss out on. I have a sense or an idea of when to be prepared, when to be alert, and when I can calm down and walk away from the computer. Do you know the longer you sit there, the higher the odds of you giving that money back? You know that intrinsically for yourself. You know it intrinsically for yourself. And so I would much rather be watching these charts behind me, waiting for a signal to come, knowing how long it has to move, letting it go without me sitting there wondering, is this a good time to get out? Is this a good time? Should I take it at 2 ticks, 20 ticks, or 200 ticks? Today in the live room, we were up, I think, almost $800 in the NASDAQ based off of one signal. I could come here and show you the last setup that we took today. Let me see if I can find that for you and download it, because it was such a great setup. And we saw the buy signal in the NQ. It had such a low risk entry. I'd love to pop it open here for you. Let's see how long that takes to download, and we'll show that to you really quick. Any questions? Yeah. So Quincy, when you're trading, your primary operating system is fight or flight. It's fight or flight. And so you're most likely to make the wrong decision. If you believe the left side, the markets are, this is what just happened now, what happened a while ago in the past. I'm using a moving average, I'm using a volume tool, I'm using a support and resistance level, I'm using market structure, I'm using candle patterns. These are all things that just already happened. And they're very hard to trade. because you're reacting to something. Yep, there's the setup today that we took. Let me turn my microphone off. There's the setup today that we took on the left-hand side of the chart. Let me go ahead and have the two things up side by side. So Quincy, in the live room today, we had a setup at 10:53. And the entry came in right here. And so I didn't even have to use all of this risk. In fact, I said, look, there's support right here. Let's put our stop right under the candle. And now, Quincy, relating to your question about emotion, I know that I have until 11:07. I knew when to look for the entry. I knew what my maximum risk was. I was able to reduce it because of market structure. And now I know how long I have for the trade to work. What else can we do to reduce the emotion? I'm not sure. I'll make a decision at 11:07. But right now I'm in a free trade and there's nothing left for me to think about. Any decision I make, anything I move is based on emotions that come from what? A self-sabotaging belief or motive. Anything I do is going to self-sabotage me in that moment. And so, yeah, I can't think of anything that makes it easier for us to trade. Okay. For years before I started the company back in 2008 and 9 with my best friend Ron, I had this feeling we were playing in a rigged game. That no matter what we did, no matter what we learned, no matter how many forums we were in, no matter how much money we spent, no matter how many conferences in Las Vegas we went to, it was always going to be an uphill battle. I think this graphic is the one PowerPoint slide I've used the most over the last 15 years because it just reflects how most people feel every day. And so I want to change that sensation. I want you to feel like you've got 12,000 lines of code finding you times that banks don't want you to know something's about to go down. They don't want to share their plans with you because then they have to share the liquidity, the rewards of that. I want you to be surrounded by nearly 20 years of expertise with a program that has a near perfect Trustpilot rating with actual customers. When you sit down to trade in the morning on Monday, Tuesday, Wednesday of next week, you have this new perspective that fewer than 1% of traders will even consider is a real thing, let alone the evidence that you've sort of seen here today, right? And I did manage to hang up my chart here with SPY. We'll go ahead and close that out. So is this an acceptable way to leverage the universe? Because at the end of the day, this signal was here because somebody moved the market down at 12:45 over and over again. Somebody moved the market down at 11:35. They pushed it up at 11:55 and 2:10 and 2:40. All of these signals here were known about in advance. And so now as we come into Sunday night and Monday morning, do you want to know what they have in store? And believe it or not, Quincy, about 90% of people who come through these doors, about 75% of people who sit through the webinar and see the evidence for themselves, they don't want it. They'd rather be surprised on Monday and Tuesday and Wednesday. They'd rather keep doing what they're doing. They'd rather disregard it as fringe and crazy because they'll never believe what they saw with their own eyes. They leave sad and disappointed because if you believe what I believe, it means most everything you've learned until today was garbage. It means most everything you heard and learned was a marketing machine's regurgitated legacy teaching. It means you wasted a lot of time getting to this point where things finally make sense. You've been working on a computer you thought had Apple on it, and it was Windows the entire time. Or opposite. I'm hitting Control C. It's not copying. I don't understand. It's Android, you idiot. You're on a Chromebook. It's the wrong operating system. You're trading in a world that's not predictive, and that's why it's not working. These guys know what they're going to do. They already know what they're going to do. I told the entire internet, anybody who would listen to me, when the market high was coming in, using a 16-year-old pattern. I'll show this to you again for those of you that are paying attention. On our Facebook page and in our classes and in our webinar, I've gone over this more times. I want to bear it out one more time. In 2008, we put in a market high between the 11th and the 14th of October in 2008. All of the times and dates, Quincy, that you see here from 2008, we've been following them into 2024. And so I've been warning people, hey, I think the high of the market is coming in between October 11th and October 14th. There'll be a push up on the 22nd and then a drop from the 31st down. Do you see what I did there, Quincy? And if you compare that to what's actually happening, right? Let's pull up the chart. It happened. All of the dates happened. We'll load the defaults on there again. Look. They're doing it right in front of us, and they're not caring. October 11th through the 14th. There's the 14th. The 22nd was the push up. And then what did I say? The 31st. When's the next signal coming? The 31st is down until when? Jesus Christ. I hope it's wrong for the country, for all of our friends and family. I hope it's wrong. 22nd into the 31st, November 1st, down day, and then it's a pretty big slide back until the lows of August. What are the middle of August lows? August is right here. So I'm anticipating this or this. That's a pretty big drop. But if they're doing what they did then, that's the high. So Quincy, if we come up and through this, I know that we're not following the pattern and it's a puncture trade higher. But until then, I'm watching for this. because of what I believe. All these other dates have been followed so far. And so it comes down to, what do you believe? If you don't believe what your own eyes are telling you, then we're sort of at an impasse here and there's nothing left I can do to help. We're the only company that gives you the software, teaches you the setup. You get all our workspaces and templates. There's video archives filled with training. There's a Skype group with 300 customers in it that are sharing ideas and working with each other. Let me see if I can still find that. Here's our Skype group today. If you're a customer, you have access to this. And guys are in here sharing their setups and their entries. Here, trader went in around 57.97 and he got out at 57.88, nearly 10-point drop on his short here today. These are customers that are sharing their entries and exits with each other, going through the different setups and then showing their actual results in their accounts. So there's even a community for you to be a part of. What's the promo code? Let me show you that real quick before I let you go. If you go to our website, the program that we're talking about, it's an indicator for NinjaTrader in our product store called Tachyon Warp. You need Warp for any of the other stuff to work. And at the bottom of the Warp page is a Buy Now button. When you click on it, there'll be a pop-up. That class I showed you earlier, where I'm showing that entry earlier here today, all of these setups that are taking place in this live room. This is something I teach from 9 a.m. until 11 a.m. Monday, Tuesday, and Wednesday. You can see me going through that daily bar analysis that I was showing you. And then once the markets are rocketing and rolling along, we look for entries together using the setups and the signals that I'm teaching you today and in the room. That's what's available for $200 a month. If you like hands-on learning with people who've been using the program for a really long time, it has its own separate Skype group. Just simply add it to your cart. If you don't want it, just continue to the cart without it. The promo code is WARPOFF. WARPOFF. Whiskey Alpha Radio Papa Oscar Foxtrot Foxtrot. And when you hit apply, it's going to take $500 off the price. Quincy, I don't know if it's an election year. I do know that I have the times for the 1 minute, 5 minute, 15 minute, 30 minute, 60 minute daily for every market you can think of. If they started selling peanut butter futures on Monday, we could plug the data in for peanut butter futures and have the same times with the same level of accuracy that we've seen here today. If you want to get a sense for what other people's experiences have been, 4.6 out of 5. It got lowered a little bit because Pat says it's not very reliable on a 5-minute E-mini S&P chart, which is disheartening because you can see for yourself what it did on a 5-minute E-mini S&P chart. So we're working with Pat. We've reached out and said, hey, there's something wrong because the signals work as well as they ever have. And this morning, if you went long at 9:35, you went from 57.95 to 57.69. So a 25-point jump this morning on the E-mini S&P 5-minute chart from here to here. So read Pat's review too. It's important that you get a sense of what everybody said. My response to it, Carl, who's $200 away from qualifying his 2 accounts. Carter, Venus is here as well. CJ, Alberto had a pretty fun experience with us. I like those because it tells you that we're not jury rigging all of these reviews. I like it that you can see someone actually wrote something that wasn't a 5-star. And then you can look and see what everybody else's experiences were. So those 1 and 3 stars actually help us kind of frame out the fact that the other 110 reviews are actually real people as well. So I'm kind of proud of those 1 and 3 star reviews, to be honest with you. It's sick and twisted, but there it is. All right. At the end of it all, this isn't anything new. Other people thought of this before I got here. I mentioned a man named William Delbert Gann back in 1908, 1910, was looking at time cycles. But he had a pencil and a piece of paper in the New York Library. We have a Pentium 9 computer with 64 gigabytes of RAM, a 5 gigabyte internet connection, and VPNs all over the world that help the software work. This isn't anything new. Banks have been doing it for over 100 years. They get caught cheating all the time, and they love it because they know, again, 75% of people who come to the webinar won't believe it. 90% of people who just come to the website and see the results for themselves go home preferring to be surprised on Monday. I want to thank you for your time. Thank you to those of you who are signing up and getting started with us. Thank you for letting me do this on Friday and review those times with you again. Election year means volatility. Volatility means profits. Profits with low risk and high reward. If you're careful and you know these moves when they're coming, you can get in with about as low of a risk as you could and see if those moves are coming. I want that for you. I want you to be in those $600, $700, $800 per contract moves like you saw here in a moment in the review of the class from today. I want you to participate in those. We had one trade on the ES. It was 10 points today. And so really think about why you wouldn't get this. If it's got a 4.7 out of 5, if we've been around nearly 20 years, if the predictions worked after 2 days with a very basic entry system and were net profitable over the 2 and 3 days you watched, why would you not get it? I don't want you to miss out. I want you to be part of those people that are celebrating those experiences. I really want your 4 and 5 star reviews. They're addicting. All right, here we go, winding up. I'm going to give you the big benediction here. May the wind be at your back. May the sun shine upon your faces. May the mountains lay low before you. May the valleys rise up to meet you on your journey. I wish you peace, prosperity, health, community, fellowship. I stand in agreement with you for all the things that you want for yourself. Today represents the possibility for a new beginning. I believe that. It's not just something I say. I believe it. This week I've been surrounded by people who have great ideas. They talk about this and they're going to do that and they're going to do this and they're going to do that, and they never start. I have a close friend who's very frustrating to be around. It's just not the right time. I just don't know. I'm going to wait for this. I'm going to wait for that. And I've watched him now for 15 years do nothing in his life. He is Walter Mitty incarnate, living a life of quiet desperation. My father used to say, intention without action is meaningless. You can intend to do something, you can intend to change, unless you do the thing, it's a meaningless intention. And so I really do believe that some of you here today can start something brand new. You can add to an existing system or setup. You can put yourself in a group of people who are earning as they learn and sharing what they're sharing with each other. It's now generational. I've taught it to enough people that those people are teaching it to new people. It has transcended me, and it's now in discipleship mode. One person is going out and now evangelizing other traders. It's bigger than me. And so I know that it can be big enough for you. Thank you, Quincy. If you need to get in touch with me, I know I always forget to do this. You can text first. I always call back. I'll give you a couple ways to reach me. Michael at backtothefuturetrading.com. That's my email. I respond to everybody who writes me. And then 336-703-7667. And let me just say a word about Pat's review, his 3-star review. If you go and read my response, you'll see when I looked, Quincy, he never wrote an email asking for help. He never attended a live training class. He never asked a single question in the Skype group. If you're that person, please reach out. Let's connect you to people who are doing better, that can offer some insight into the mistakes you're making. Let's get you locked into a statistically relevant trading plan. Let's look at your back test and see what you've got going there. Please don't hide in the shadows and then lash out in a review frustrated that you got lost in your own rubber band ball of thoughts. I'm not hiding. We're one of the only trading websites with a phone number, an address, and an email. Try calling any one of the knuckleheads and getting one of the owners. So I want you to read Pat's review and see what my response is, but I don't want you to lurk in the shadows dissatisfied. We can connect you to any one of a number of resources to get you on the path to success. So you have the same experiences as the other 120 plus people who left 4- and 5-star reviews. It's that simple. So don't get lost in your own dark thoughts. Please reach out and ask for help before you sit down for a half an hour and spend more time writing a review than you did ever asking questions. Please, 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 please. And so that's my last piece of advice. Guys, have a great weekend. I hope you had a good Halloween. Be safe, be careful. We're coming into some pretty nutty times a week from today. We're going to have our this will be our 3rd Civil War. So if you're an American, gird your loins. Here we go again. If you're outside of the country, pop yourself some Orville Redenbacher, sit back and get ready. It's about to get crazy again up in here. And so that's only good news for us if we're trading. And I'll be watching the times with you next week in our live trading room. Take care. God bless. I love you. I'll see you next week. Welcome on board to our new customers.